Hey everyone, the Indian stock market has witnessed an exponential rise over the last few years. And one sector that benefited from this trend is the brokerage sector. Now this brokerage sector is again divided into two segments. You have traditional brokers and new age digital brokers. Historically, the Indian brokerage sector was ruled by traditional brokers like ICICI Direct, Kotak Security, but today, new age brokers focused on technology with their low-cost trading options have outperformed the traditional brokers big time. I'm sure majority of you would be using one of the new age digital brokerage platform today. And that's where today I want to discuss the rise of one such company, Angel One, a leading new age brokerage firm. Company launched its IPO during COVID period in 2020 at rupees 300. And since then, it has a dream rally with stock touching highs of 3,900, generating 13 times return within 3 to 4 years of IPO. However, today, Angel One share price is down nearly 40% from its peak and trading at around 2,450. The question is, why Angel One share price has fallen significantly? And today, this company is available at PE of just around 19. So is it a buying opportunity? Has stock bottomed out or there is more pain ahead? I'm sure it would be a good case study. Moreover, in this video, I would also discuss the future growth potential of the company and key risk in the growth thesis. By the way, company has recently done a QIP round and raised around 1500 crore that attracted institutions like Goldman Sachs. So I'll help you understand what company intend to do with this money. Alright, let's get started. As far as Angel One business model is concerned, I don't need to explain it in detail. It's a brokerage firm with a complete digital business. Today, it is among India's top 3 brokerage platform. So they don't have physical branches all over the country. Everything is digital. And this digital focused business has resulted in exponential growth for the company as their scale is not restricted to a few cities. Today, millions of people from tier 2 and 3 cities are also investing in the stock market using Angel One app. Especially the tech-savvy Gen Z and millennial generation is their largest audience space. And company makes money on transaction done while buying and selling stocks. This slide shows the revenue breakup of the company. In Q4 of FY24, 68% revenue of the company is from trading platform, which is their main business. Then 18% is interest income, where they lend money for trading under margin trading facility. A small portion of their company's revenue comes from depository and distribution of other products. Now within broking, 85% revenue comes from F&O, that is futures and options. Only 11% comes from cash and 4% from commodity. Interestingly, SEBI data says that 9 out of 10 traders lose money in F&O. But the largest beneficiary of F&O is certainly the brokerage houses. No matter you make money or not, brokerage houses certainly makes a ton of money. I hope you got a fair idea of revenue source of Angel One. If you look at company's financials, it has been an exponential growth journey so far. Especially post-COVID, company's revenues have grown from 750 crore to 4,200 crore. That's nearly 6 times growth in 4 years. And profits have grown from around 80 crore to more than 1100 crore. That's nearly 15 times growth. What a journey it has been. And look at the margin expansion. Margin expanded from 24% to 40%. Here it is very important to understand why the margins have expanded crazily. And the answer is economy of scale. Since Angel One is a fintech company, it has already invested in the tech platform. And now its variable cost is very low. As a result, the more company expands its business, the more profit it makes due to operating leverage. And hence, you see such crazy growth in operating margin. And this is the best part of tech companies and why I personally like tech platforms. It's because of their asset-light business model where the margin expand on top-line growth due to economy of scale. And Angel One is a great example of this margin expansion. The question is, can Angel One sustain such high margins in FY25? So I dig deep into the latest con call and management has guided for 43 to 45% margin. Company also enjoys very high profitability with ROE of 43%, ROCE of 38.7% and has got a debt to equity of 0.84. Company has recently declared its Q4 result and its sales are up 64% year on year and net profits are up 27% year on year. The reason why their net profit has not grown as much as revenue is because company's margins has reduced from 47% in Q4 of FY23 to 39% in Q4 of FY24. The key reason is company has done some upfront investment to acquire new customers. This would benefit the company in the long term. For instance, it has won the bid to become an associate partner in IPL for 5 years and company invested 410 crore rupees for this initiative. This amount would be deducted during the period when IPL would happen. For instance, IPL started in March month and hence company deducted around 22.7 crore as marketing spend in Q4 of FY24. The major expense would happen in Q1 of FY24, which is the current quarter, where company would show 120 crore in expenses. And this is one of the reasons why share price is corrected in the short term. Because in Q1 of FY25, a big chunk of company's revenue, that is around 120 crore money, would be deducted from IPL expense. And that would have a one-time impact on its Q1 of FY25 results. However, in the long term, this is a good investment because Angel One is targeting people from tier 2 and 3 cities, which is still a highly underpenetrated segment, and this IPL sponsorship creates a great visibility for the company with top of the mind recall. Having said this, the kind of growth Angel One is showing and the kind of opportunity it has, why its share price has tanked nearly 40% from the peak, and why it is trading at a cheap PE of just 19. So here you need to understand that market gives a certain valuation to a sector and stock within the sector based on various parameters. And one of the parameters is consistency in growth. Now in case of brokerage sector, it is extremely cyclical. During bull run, companies like Angel One are minting huge profit, but during the bear market, their profits would tank badly and its PE would jump. The simple reason is during bull market, the F&O trading is at its peak, but during bear market, there is drastic fall in trading activity. So today everything is looking great, but during bear market things would become quite ugly. Having said this, if you look at the bigger picture, the growth story of Indian stock market has just started. Over the next 20-30 years, Indian stock market would witness huge participation because this is arguably the best asset class to invest money for wealth creation. And companies like Angel One are bound to benefit from this trend. But like I said, it won't be a smooth journey. It would be a roller coaster ride. Today, this brokerage sector is an uptrend, but eventually there will be downtrend. However, if you look at the next few years, I think we are in a structural bull market and Indian stock market should generate great return for the next few years. So I am expecting more participation in stock trading and hence more profit for companies like Angel One. But they won't command a very high valuation because of the cyclical nature of their business. Remember that. Then another risk for brokerage sector is the regulation risk. SEBI keeps a close eye on the sector and time and again updates on its regulation. Any negative development can impact brokerage sector profitability. And that is also the reason market does not like to pay a high PE to brokerage firms. And third reason why Angel One share price has corrected is due to risk of competition. Jio Financials has announced its foray into brokerage sector and Reliance has the reputation to disrupt the sector it enters into. So market is cautious of this move from Jio and its impact on brokerage industry. Although if you ask me, the opportunity size is quite big and multiple players would thrive in this brokerage space. Unless Jio makes F&O trading free to attract traders. That can have a negative impact on other companies. Still, I believe that it won't be an easy journey for Jio to build a great technology platform from day one. Platform stability is very important in brokerage sector and it takes a lot of time to reach a highly stable level. Traders won't like to lose money due to platform instability. Considering all these factors, if you ask me, a PE of 1920 for Angel One today is quite attractive. Any further correction will make the share price even more attractive. And one of the reasons is that company is not only dependent on its brokerage business. In fact, company is expanding its wings to foray into multiple financial segments and become a one-stop solution. For instance, Angel One has started building its core leadership team for AMC business and working to get final approval. So it would be launching its own mutual funds. Then Angel One is building its wealth management team to cater to HNI and ultra HNI segment. It has roped in Mr. Shrikant Subramaniam, an executive from Kotak Group, as co-founder of wealth management business. Then company is also aggressively expanding its distribution business where people can invest in mutual fund using Angel One app. Then company has raised around 1500 crore via QIP at an average price of 2,555 to fund its MTF facility where it gives margin facility on trading. This is basically a loan to invest money for a fee. This is again a big chunk of company's revenue. This QIP attracted marquee firms like Goldman Sachs. And DI has increased the stake from 9.49% to 13.59%. Motilal Oswal FlexiCap purchased 2.65% stake in the company. And today company share is trading at similar levels of QIP. So overall, Angel One intend to become a one-stop fintech platform with multiple offering, and once other business of the company would grow and dependence on brokerage platform would reduce, company's PE should get a re-rating. Now this slide gives a great picture of opportunity size. We are a country with more than 140 crore people. Out of this, around 15 crore people have Demat account and only 4 crore Demat accounts are active. That's only 2.9% of the population. This number should grow further. So this is my analysis on Angel One. If I quickly summarize, company has grown at an exponential rate in last 4-5 years, and considering the current structural bull cycle we are in, I expect brokerage industry to continue to do well. However, since it's a cyclical industry, it would not command a very high PE. Today, Angel One share price is corrected nearly 40% and is trading at a PE of below 20, which is a good opportunity in my opinion to consider it for long-term wealth creation. Company is also expanding its business, including areas like AMC, wealth management, distribution, to reduce their dependence on brokerage sector. And there's a good synergy in these business for cross-selling. So once an investor invests in stock via Angel One, it can also use other services like mutual fund investment, wealth management service, etc. Considering all these factors, Angel One is looking very interesting. Having said this, please keep in mind the key risks that we have discussed, including SEBI regulation, geo competition, and of course the cyclical nature of brokerage sector. And Q1 of FY25 will see a one-time impact on operating profit due to 120 crore of IPL expense. Now tell me in the comment, what is your take on Angel One? Is it worth investing the money? If you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.